Good evening, traders. This is Brian with TraderShark.com, an educational website to learn how to trade the S&P emini futures. Today is Friday, June 17th, 2011. The following are examples of trade setups that occur on a regular basis. We are showing 5 trade setups for a potential profit of 7 ES ticks. The market opened up this morning at 1274.75, 1275 being a naturally occurring number. We don't usually trade, that's this white dotted line here. We don't usually trade from 9:30 until 9:45 Eastern Standard Time. That being said, we have what's called an opening range, and that exceeded 5 points today. That being said, we knew today was going to be a choppy day. In addition to it being quadruple witching, try to say that 3 times real fast. That's where options expire, futures expire, options on futures expire. That being said, we waited until we got outside of our no trade zone. We had an opportunity to get long. We hit our target 1, target 2 did not complete. As a result, we had -2 tick loss. Shortly thereafter, we had an opportunity to get short. Target 1 and target 2 were hit for a total of 6 ES ticks. As soon as we hit our hourly range low, we had an opportunity to get long. Target 1 was hit, but then there was no follow through. We got to stop out of -2 ticks. We were looking for an opportunity to get short. However, it exceeded our range. We do have a 5-point range to the downside. It exceeded that, so we chose not to take this trade. We had an opportunity to get long going into the no trade zone. We hit our target 1, but then if you're in a trade prior to the no trade zone, you stay in the trade until you either get stopped out or you hit your profit target. In this case, we got stopped out for -2 ticks. We do have what's called a no trade zone that runs from 11:30 until 1:15 Eastern Standard Time. That's simply a period of lower volume and higher volatility. We waited for us to get outside the no trade zone, and we didn't really have an opportunity for any other trades until right here at about 2:12 or 14:12 Eastern Standard Time. We had an opportunity to get long, target 1 and target 2 for a total of 7 ES ticks. And then again, knowing that it was a choppy day, quadruple witching, we had really no idea as to what direction this market was going to go. The indicators sometimes become irrelevant. Had an opportunity to get short, but it exceeded our range by a total of over 5 points. Again, we did not take that trade. Going into the end of the day, we finished up the day with a total of 5 trades, potential profit of 7 ES ticks, and the market flattened out from 4 until 4:15 Eastern Standard Time. To learn more about these and more advanced trade setups, such as the shark attack and the wave trade, or for a copy of the trading manual, please visit TraderShark.com. Thank you and have a great evening. We've had a question in the past quite a few times as to why we use a 30-minute chart and we watch trend lines. I would like to show you something back that started here on June 2nd, 2011. We've drawn our trend lines to cover the previous highs, indicating where a downtrend was. Above the current downtrend, it would indicate a bullish sign. Below the downtrend would indicate a bearish sign. You can clearly see that here. What's really important is, effective on Friday, we started to see, you'll notice that on Wednesday we had a gap up, Thursday we had a gap down, continued to stay within this downtrending channel, and on Friday this particular downtrending channel actually posed major support level for 2 opportunities to get long. This right here with a long wick to the downside is considered a bullish candle. This candle, again these are 30-minute candles, with a long wick to the downside is considered a bullish candle. So just keep this in mind as to why we watch 4 different time frames and how we use them in combination to prepare for a better trade setup that day. We have a lot of questions in the chat room in reference to a wedge pattern. There are ascending wedges, there are descending wedges, there's triangular wedges. In this case, we started to see a triangular wedge form on our tick chart, and that usually constitutes 5 touches, right? So we've got 1, 2, 3, 4, 5, starting to get a 6th touch here. We're looking for a breakout. And this is not a breakout. We want the candle to close below the uptrending wedge line. That being said, we have a breakout to the downside. The close of this candle would be the entry. The close of this candle would be the entry to the downside, or you can wait for a potential pullback to this uptrending resistance line on the wedge pattern. This is called a kiss goodbye. You want to have your stop above the downtrending resistance line. Well, how do we know where our downside target is going to be? Right here. We draw a closure of this. Now you can see a triangular wedge. Most things are symmetrical in trading. here's our symmetrical wedge, symmetrical triangle. We simply draw the low to the high of this wedge pattern, and you come down here and you touch the breakout. Well, obviously it doesn't angle the same way, so we have to make sure that our snap mode is off, so it's not going to snap into place, and we move it to the same location right there. Your downside target from the high to the low, symmetrical to the downside, target completion of a wedge pattern. Now, in addition to this wedge pattern, we also had what is called a hook pattern. I'm going to go ahead and remove the wedge pattern here for you. A hook pattern is a break of our opening range, and we use this as our downside target. The exact same, again, we're talking about symmetrical, the high to the low, which is exactly what this is. High to the low, symmetrical to the downside. However, if you do have the patience, you would extend this hook pattern, extend it up to the right. As long as we don't break that, our hook pattern remains in place, and our target down here, downside target completion 1262, remains in fact. As the day continued on, we see that we hit our hook pattern. So if you have any questions in reference to wedges, hook patterns, anything else, please feel free to contact us at TraderShark.com. To learn more about these and more advanced trade setups, such as the shark attack and the wave trade, or for a copy of the trading manual, please visit TraderShark.com. Thank you. Have a great evening.